From New York to our TV and radio audiences worldwide, welcome to Balance of Power, where the world of politics meets the world of business. I'm David Weston. We start with the markets today. Go to Abigail Doodle. So we've got a nice broad rally going across right after the July 4th weekend. What's going on, Abigail?
It's certainly a very healthy rally. In fact, David, we're looking at the longest winning streak for the S&P 500 of 2020. Right now, the S&P 500 up for a fifth day in a row. That's the first time we've seen that since December of last year. And we have, as you were mentioning, all of the indexes participating to a wide degree. Now, some of this was set off by the big rally in China, multi-day rally there, parabolic move higher, spiking higher for those China stocks, really bleeding into all of the global equities, really leading the way here in the U.S., though, David, some of the tech-heavy stocks. So from a sector perspective, from the 2020 terms, we're actually looking at defensive sectors on top, such as the communication services, along with consumer discretionary and tech, and really leading the way, the New York FANG index up for a fifth day in a row, up 4.8% at this point, really surging. This is Amazon, of course, is above $3,000 for the first time ever. So the risk on mood that we saw last week on the better economic data continuing right into this week.
So, Abigail, listen, it's good news, and I'll take good news, but are we at all worried about some of the things you just talked about? I think the last time the Shanghai Composite went up this hard, this fast, it didn't end very well. And similarly, are we worried about Amazon being that far over its 200-day moving average?
Terrific points, David, because the last time that the Shanghai Composite put in a move of this degree back in 2015, it went much longer and further than anybody expected, but it ended in basically a 50% crash. Whether or not that happens at some point for the Shanghai Composite or when is probably the bigger question, is unclear. But when it gets this frothy, it's really difficult to tell. And relative to Amazon, this stock is up about 80% from the March lows. Really incredible, unbelievably overextended. And this is nerve-wracking from the standpoint, this is the ultimate stay-at-home stock. So while you have this ultimate stay-at-home stock doing so well this year, while the recovery sectors of energy and financials are in bear markets, it really creates a tension because of that overextension and that frothiness. It tells you that at some point, stocks are likely to come back to some sort of technical reality, at least. You were talking about that 200-day moving average, Amazon about 50% above it. But when, David, who knows? Sometimes these things go much further and longer than you could ever expect, quite frankly.
Yeah, very wise, very wise. Thank you so much to Abigail Doolittle for that report on the markets. And we really have had some tension, as Abigail just said, and really it's sort of a tug of war between, on the one hand, a virus that won't go away, and on the other hand, a really stubbornly upward moving equity market. To figure out which is winning, we now welcome Sarah Bianchi. She's head of U.S. public policy at Evercore ISI. So Sarah, what is going on really? Because there just seems to be something of a disconnect between what the markets are telling us and maybe what the economy is telling us.
Well, the economy obviously had a good report last week on the jobs report, and that was encouraging and I think good news for the Trump administration. But at the same time, you're right. We're seeing the virus raging all over the country in all sorts of new hotspots, and we're starting to see some businesses who are pulling back a little and are closing back down, even in states where they really weren't sure they wanted to, like Florida, like Texas. So I think we're going to have to wait and see. The reality is we lost a ton of jobs in the spring, and so there's still, even with these good jobs number, a lot of people out, a lot of things closed down and looking for work. And so at some point, I do think the market may want to consider some of those factors going forward.
One of the great things about Evercore ISI, at least in my experience, is you look at so many different data points and very frequent data points, really up to date. What are you looking at right now to get a sense of whether those jobs numbers really were right, some of the economic numbers were really good, or whether it was a timing issue because it really excluded, for the most part, the second half of June?
That's a great question. I mean, we are looking at the sectors that the jobs came back in, and also that some of these were temporary unemployment numbers, people who did believe they were furloughed, and we're seeing some more permanence on some other parts of the economy, more permanent layoffs. And so it really is a mixed story. And then we're watching very, very closely when Congress returns from the July 4th recess, what they do around the next stimulus. We think that there are some important cliffs that are coming up, like the extra unemployment insurance that rolls off in the end of July, some real tensions in state and local, and a lot of layoffs in the public sector that are coming. We're watching very closely to see if Congress steps in, as we still think they will, and provides another form of relief in August. And we think that is very critical for the economy and consumers at this point.
Sarah, you, of course, are in charge of U.S. public policy for Evercore ISI. You mentioned the month of July with respect to Congress, perhaps further surveillance. We also have a pesky little election coming up in November. To what extent is this economy dependent upon further fiscal stimulus you just referred to? And for that matter, how nervous is the economy about what might happen in November?
We're starting to hear a lot of investors ask about what the implications are of a Democratic sweep. They're starting to consider the kinds of things on healthcare and energy and the like that a Democratic administration might consider. I would say it is not necessarily causing the anxieties that you might expect. I think there is some who believe that the relationship with China might be a bit more predictable, and that would be helpful to markets. Potentially some of the public health measures in combating the virus might be effective. So it's not a clean story, but certainly investors are starting to look and starting to price in particular sectors. I would say the other thing is, for the president, the best case he right now has with voters, where we're still seeing a slight advantage to the president, is on who can rebuild this economy. So the other thing we're really watching is, can these jobs numbers keep up, and will voters really start to transition from the virus and some of the other issues we've seen this summer, like race relations, and really focus there? And will President Trump be able to use that to close some of the gaps in the election right now? We think these numbers will tighten to some degree, but obviously there's a long way to go.
And finally, Sarah, I mean, there's been a lot of volatility in the marketplace and in the economic numbers. They got way down. They've come back, although they had a long way to come back. They certainly are not back to where they were. What about the longer term? As you look at the U.S. economy, what are the prospects for longer term damage to the U.S. economy, or maybe potential upside?
Well, I think there are going to be some lasting implications for sure in this economy. I think that we are going to see unemployment at numbers that may not sound better right now than what we're up against. But if you think about the financial crisis and the Great Recession, they're well above anything contemplated in that area. So I think we are going to have some real implications. I think for higher education, and education particularly in the state budgets, for healthcare, in terms of whether or not some of these hospitals and other providers can build back. So I think there's just a whole lot at some point. We think Washington will have to reconcile with some of these deficits. We're not there now. Right now, it's very much about filling the holes in the economy and taking more permanent steps like infrastructure to make it more resilient. But ultimately, of course, a lot of money has been spent here. And so we think that whoever the next president is has a lot of economic challenges in their future.
Yeah, thank you so much, Sarah. Really great to have you with us. That's Sarah Bianchi of Evercore ISI. She just mentioned, actually, the plight of hospitals. We're going to talk to the leader of one of the most influential hospital centers in the country. That is the Cleveland Clinic. That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. It's time now for First Word News, and for that we go to Karina Mitchell. Karina?
Hey, David, thank you. The coronavirus pandemic is hindering some HIV patients from getting the medications they need. The World Health Organization says more than 70 countries are at risk of having drug shortages to treat HIV because of the pandemic. The WHO says 24 nations already have critically low stocks or disruptions. And in other news, the Canadian Prime Minister Justin Trudeau says although he wishes the U.S. and Mexico well, he won't be joining a White House meeting to celebrate a new regional free trade agreement between the nations. President Trump and Mexican President Andres Manuel Lopez Obrador are due to meet Wednesday. Trudeau has been conducting cabinet meetings online instead of in person because of the coronavirus. Trudeau praised the new pact, saying it will help North America emerge stronger from the pandemic. And President Trump is preparing to issue executive orders on a wide range of topics. White House Chief of Staff Mark Meadows tells Fox News the orders will cover China, manufacturing, immigration, and prescription drug prices. Meadows says it is important for the president to provide incentives for manufacturing to be brought back from overseas. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. David.
Thanks so much, Karina. Well, just as we thought we were doing better, COVID-19 cases are on the rise again across much of the country, raising the question whether we open things up too far and too fast. To give us some answers, we welcome now Dr. Tom Mihaljevic. He is the CEO and president of the Cleveland Clinic. So, doctor, thank you for being with us. Let me ask you, it's sort of in the bluntest terms, is it the virus's fault or our fault? And by that I mean, did we go out and gather together too quickly without the proper social distancing? Or is the virus mutating and becoming more contagious?
Well, David, thank you for having me. The pandemic is still around us, and I think there are a few facts that we simply have to be aware of. First, the virus is here, and the virus is here to stay for foreseeable future. The second fact is that we do not have a cure. The third fact is we do not have a vaccine. And the fourth one is probably that we really have to learn how to live with the virus. And there are ways that we can minimize the spread of the virus to keep each and every one of us safe. And those measures are known to many viewers. It's masking, it's keeping physical distance, good cough etiquette, and good hand hygiene.
And as you looked around on July 4, as far as you could tell, are people obeying the rules, or is it the government is not having the rules be tight enough, or are people just disregarding them?
Well, I think that first and foremost, we have a responsibility to educate our fellow citizens about what is appropriate in this time of pandemic. We cannot emphasize enough how social distancing, physical distancing, wearing a mask, avoiding the large gatherings, in particular in enclosed spaces with poor ventilation, is really important to keep each and every one of us safe. A real challenge with a pandemic like this is in order for us individually to be safe and stay healthy, people around us have to be very, very cautious. And I think that is the most important message. And the degree of compliance varies. It varies in the different parts of the country. It varies in different societal strata. It varies in different age groups. So what we're seeing today is a result of a relaxation of a restriction and not a full compliance to what all of us understand is and know about is reasonable and responsible behavior.
Doctor, there was a time not that far long ago, late March, early April, when a number of us were really concerned about overburdening the hospitals, that we were really in bad shape, particularly here in New York, New Jersey, Connecticut. As you look at it now, first of all, how's the Cleveland Clinic doing? How are you keeping up with whatever cases you have? And as you look across the country, how are we situated in terms of hospital care?
Well, we have come a long way since March. In this past 4 months, we have learned a lot about the virus. We have learned a lot about how we as providers need to get organized. Cleveland Clinic is doing really well. We are seeing only a mild increase in the number of patients hospitalized. Being in a hospital with a COVID infection here in Ohio, that number is somewhat higher in Florida, where we also have a very strong presence. But this is not a matter of concern right now. We have enough equipment, enough people, enough medication, and enough capacity to serve each and every person who needs our services.
So Cleveland Clinic obviously is first and foremost an organization to serve people, to make sure that they get healthy, they stay healthy. But you're also a very big business. How has this affected the Cleveland Clinic business?
Well, there are two phases in this pandemic that had different effect on our business. in the first part of the pandemic, in the first 2 to 3 months, what we did deliberately, and then rightfully so, is that we have decreased the number of services that we could defer in order to create a capacity for what we anticipated it was supposed to be a very, very large influx of COVID patients. Well, that wave of a large number of COVID patients, fortunately, here in Ohio, in Florida, did not happen. As a consequence, we had for about 2 or 3 months a lot of capacity that stayed vacant, and we have suffered significant financial losses. Fortunately, what we are seeing now is that the confidence of our patients in our services and the safety of the hospital environment is getting better. So they're coming back to resume a much needed care that was deferred for several months. So we are now about 95% to 95% of our regular pre-COVID hospital activity.
And what about testing and contact tracing for that matter? Are we doing enough of it in this country? It certainly has ramped up a lot from what it was before, but there's things like talked about like group tracing or community testing that might be done. Are there things that we should be doing on the testing and tracing front that we're not?
We're doing much more testing than we did only a few months ago, and that has been a tremendous success across the entire country. And a part of the reason for it is because very many hospitals have picked up the responsibility for testing, and Cleveland Clinic as well. Over the past several months, which we have increased our ability to testing several-fold. But we're also looking, as you just mentioned, in new ways to test larger populations. And I do believe that our ability to test and our ability to test larger populations is increasing very, very rapidly. And I do believe that we will be meeting the demands of every person who needs to be tested.
Well, and that demand may go up, entirely possible, in the fall, because a lot of us are concerned about schools, whether they're public schools, lower schools, or higher education, how that's going to work. Do you see a path right now to going back to school in some form, at least in a safe way, particularly as people are concerned that there'll be a normal flu season that will really exacerbate the problem?
Well, the good news about the upcoming flu season is that all the measures that we're taking into account to minimize the spread of a COVID virus are also effective measures to minimize the spread of the flu. So we are very much hoping to see a lower number of the flu cases than what we used to see historically. So that is a good news. Obviously, with an opening of schools and opening of universities, we're faced with a new challenge. However, we do believe that there is a way to keep both the students as well as the faculty safe. That will require the same measures that we spoke about before: more social distancing, more awareness of those who are ill, wearing masks in classrooms, just simply to minimize the risk of exposure. But there is absolutely no doubt that in particular for our youngest students, coming back to school is really important, not only from educational perspective, but also from the perspective of their social development.
And finally, Doctor, let's talk about one of the aspects of this that may be the most tragic, and that is the greatly disproportionate effect of this disease on minority communities, the Black communities, the Hispanic communities, and for that matter, the Native American communities as well. Are there things we can do to address that particular problem? I mean, some of those communities have a tougher time with social distancing. They have jobs that require them to be in touch with people. Are there things that the healthcare system can do to really disproportionately help those people who need it the most?
Yes, we can do a lot, and we should do a lot. I think we have to remember that in order for us individually to be safe, our entire communities have to be kept safe, in particular those who are most vulnerable. Our minority populations across the country are those who deserve the most attention. Most large healthcare systems are really making a lot of effort to come closer to those in need, to open up the testing capacity as well as services at their homes and in the neighborhoods that are most affected with COVID. Cleveland Clinic is no exception. We're firmly dedicated to the health of our entire communities, in particularly those that are most vulnerable.
Okay, Doctor, thank you so very much for being with us today. It was truly helpful. That is Dr. Tom Mihaljevic. He is the president and CEO of the Cleveland Clinic. This is Balance of Power on Bloomberg Television and on radio. This is Balance Power on Bloomberg Television and Radio. I'm David Weston. You get two for the price of one today. Two stocks they are, Berkshire Hathaway plus Dominion, as Dominion sells most of its natural gas business over to Berkshire Hathaway, and Scarlett Fu is here to explain it to us. Start with Berkshire Hathaway. And we don't think of that as an energy company, but boy, it sure is, isn't it, Scarlett?
It really has become more of an energy company. I mean, insurance and manufacturing is still the big parts of the business here, but what it comes down to is Buffett is seen as this ultimate value investor. His ability to sniff out undervalued deals when everyone else is holding their nose. Well, Buffett has been pretty much missing in action, at least during the March sell-off after the pandemic began. If anything, he was a visible victim because of his investments in the four biggest airlines, which he has since sold off. But this week, Berkshire Hathaway pulling the trigger, pouncing on a very out-of-favor area of the market, which is energy. It's buying, as you said, Dominion Energy's natural gas pipeline and storage assets right as that company looks to shift away from natural gas. Now, for Berkshire, this is the biggest purchase in 4 years. It's worth almost $10 billion, but it only shells out $4 billion in cash, and it's assuming $5.7 billion of Dominion's debt. This moves the needle on Berkshire's energy portfolio, which is very exposed to natural gas as well as renewables like wind and solar energy. Now, in the 2019 annual report, David, Warren Buffett called energy one of the lead dogs of Berkshire's non-insurance business. Both Burlington Northern and Energy punch above their weight in terms of their impact on Berkshire's bottom line. Energy, for instance, makes up 8% of revenue at Berkshire Hathaway, but 14% of the bottom line. So that gives you a sense of just how much power it packs. Now, to the rest of the market, this signals that the energy sector is undervalued. It's confirmation, really. This is the largest deal this year to buy energy assets, and Berkshire Hathaway is striking when the natural gas market is at or near its lows. Last month, we saw natural gas prices make a 25-year low, and even though it's come up a little bit, David, it's still pretty much bumping along the bottom.
Yeah, it certainly must sound that much, because Warren Buffett doesn't like to buy expensive. He likes to buy cheap,
Yes.
So he must have decided it's at a low point and he can bring it up. So that's terrific. Thank you so much, Scarlett, for that report on Dominion Energy and Berkshire Hathaway. Meanwhile, coming up here, we're going to talk with Eugene Scalia. He is the Secretary of Labor, for his views on the state of the U.S. jobs market. This comes after those surprisingly strong numbers coming out just before the holiday weekend. This is Balance of Power on Bloomberg Television and on Bloomberg Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It is time for First Word News, and for that we go to Karina Mitchell.
David, we start with COVID-19 numbers. Florida continues to see record numbers of the coronavirus. The state says cases rose 3.2% today, which was down slightly from the day before. Florida has had more than 60,000 new cases in the past week. That's the highest since the pandemic began. In hard-hit Miami, officials are planning to close restaurants, gyms, and other businesses that had already reopened to help stem the spread. And President Trump is suggesting NASCAR's only black driver should apologize after a rope fashioned like a noose was found in his garage, calling the incident a hoax. In a tweet, the president asked whether Bubba Wallace had apologized after an FBI investigation found the rope had been installed months earlier to pull down the garage door. Wallace has not been accused of any involvement. And the Supreme Court has ruled that states can require presidential electors to back their state's popular vote winner in the Electoral College. The court rejected arguments that the Constitution gives presidential electors the right to vote as they please, no matter who won the state's popular vote. The issue stemmed from lawsuits filed by Hillary Clinton electors in Washington state and Colorado who refused to vote for her despite her popular vote win in both states. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. David, back to you.
Thank you so much, Karina. Jobs numbers out just before the holiday weekend showed that unemployment for Black Americans and Hispanic Americans was going down again after a rise the month before for Black Americans. At the same time, those unemployment numbers are still above what we see for white Americans, perpetuating a growing economic inequality in this country that is going on now for a generation. After World War II, the United States embarked on a path toward income equality, as the top 1% of earners lost a significant share of the nation's income for a generation. But in the early 1970s, the nation took an abrupt turn in how earnings are distributed. Flash forward to today, and America has the highest level of wealth inequality among all of the G7 nations. Income tax data show that the average salary for the bottom 99% of American families roughly doubled from 1945 to 1973, while incomes for the top 1% grew by just over a third. But between 1973 and 2007, the bottom 99% saw income growth of only 15%, while income for the top 1% more than tripled. Race plays a large role in economic inequality. The Pew Research Center found that in 2016, the net worth of a typical white American family was 10 times that of a typical black family. And the recent economic downturn will likely make things only worse. During the last recession, the median net worth of black families declined more than that of white families, while white and Asian Americans out-earned black and Hispanic Americans at every rung on the economic ladder. Trends in increasing income inequality aren't likely to stop anytime soon. The Congressional Budget Office projects incomes for the wealthiest Americans will continue to grow significantly faster than for the poor and middle class through at least 2021, boosting the 1%'s cumulative growth to 281% over the past 40 years. And we welcome now the U.S. Secretary of Labor. He is Eugene Scalia. Mr. Secretary, thank you so much for joining us. You have a very powerful position. You can't control everything. You don't do tax policy. You don't control appropriations. But within your jurisdiction, the Department of Labor, are there things that you can do or are doing to try to turn around the growing economic inequality in this country?
Well, David, good to be with you. And actually, President Trump had done really important things to change, some of the developments that you were describing in his first 3 terms in office. As you know, we had record low unemployment in February, right before the virus really struck. It was at 3.5%. We'd created 7 million jobs since the president came in. The projection had been that we would create 1.9 million, but we created 7 million jobs. But one of the things the president was proudest about was how particularly good that economy was for groups that historically had difficulties in the workplace. So we had all-time low African-American unemployment, Hispanic American unemployment, Asian American, really good things. And then on wages, which you were covering, a really good story there too. We reversed a trend which we'd seen during President Obama's administration, where the top 10% of income earners saw their wages growing more. That was reversed. And so we had wage growth across the board, but wage earners in the bottom 10% actually had faster wage growth than those in the top 10%. And just one last point, there was a piece in the Wall Street Journal just about a month ago. The headline was that it had been the best job market for African Americans really in history before the virus struck. So the president's policies of tax cuts, of trade deals like USMCA, eliminating unnecessary regulatory burdens, it actually gone a long way toward helping all Americans economically, but particularly those who've had difficulties in the job market in the past.
Yeah, I mean, that's certainly true. That was very true. By the way, it started in the later days of the Obama administration and continued, absolutely right, during the Trump administration. And you were doing terribly well with some of the less fortunate segments of the population. But that was then and this is now. And the fact is, COVID-19 and the aftermath of the economic shutdown hit some of those minority communities, Black Americans, Hispanic Americans, harder than it hit white Americans. What will it take to turn that back around? I mean, there is a sort of a last hired, first fired phenomenon in the U.S. economy.
Well, as you mentioned, David, in the jobs report that we put out Thursday, we saw real progress. We've now created 7.5 million jobs, put 7.5 million Americans back to work just in the last couple of months, which is just so much better than people were projecting. And we did see people coming back across a broad variety of industries and also a broad demographic sweep. There was concern expressed when we put our report out for May that African-American unemployment had not come down, but it did come down. And a number that really struck me was the labor participation rate. measuring how many African Americans are out there looking for work. And that number went up significantly, more than I think for just about any other demographic. That to me showed confidence in the job market and a willingness to jump back in. Now, other things that have been in play, the Paycheck Protection Program has been really important for Americans employed by small businesses, many of them minorities, obviously. That helped keep them on payroll, and the president has continued to support and replenish that program. And then we had this very substantial unemployment benefit in the CARES Act, which the president signed, $600 a week. That, of course, has been important to Americans put out of work, too. Longer term, David, what I would say is going to be most important is what worked before. The president's policies that incentivize business growth, that's what's going to bring jobs back. It's what long term is going to lead to rising wages. And in that vein, I'll just note the USMCA went into effect last week. NAFTA was ushered out last week. That's going to be a really good thing for American jobs, too.
There's no question those numbers surprised the upside, and everybody was happy to see them when they came out last Thursday. No question about it. We still have a long way to go. I'm sure you'd be the first one to say it. We've got millions and millions of Americans that still don't have a job right now. At the same time, the numbers that you're looking at.
Absolutely. We still have progress to make.
But the numbers you're looking at, as I understand, really stopped sort of mid-June. And since then, there's been something of a resurgence of coronavirus. How confident are you in those numbers, given that timing issue? But also, I've seen reports that perhaps the surveys, you're not getting the same level of responses in your surveys. Are you confident of the numbers?
We are confident in those numbers, David. We are getting the response rate we need to our surveys to stand by those numbers that we're putting out. That is a question that I ask occasionally, and I'm satisfied in that regard. You're right. We are seeing rising cases in some locations and in some states, and that has to be taken seriously. I see that as a warning for Americans across the country that the virus is still out there. We still need to practice social distancing. When that's not possible, quite often we're going to need to wear masks, and that's being reinforced. I think, fortunately, the CDC, the Department of Health and Human Services, and others in the federal government are responding very quickly, getting added personnel out there, bringing their expertise to bear to control those outbreaks. And I think we can continue to safely reopen as long as we're careful. And again, as long as we bear in mind the lesson that we've observed in California, Arizona, and elsewhere. There are, just to take one example, still 900,000 fewer people employed in healthcare right now than in February. Those are all jobs that ought to come back. Employment in the government sector, much lower than in February. All jobs that ought to come back, and that I think will be coming back in the weeks ahead.
So, and finally, Mr. Secretary, you talked about the PPP. You also talked about the supplemental unemployment insurance. Obviously, this is a big issue right now in Washington about another round of fiscal stimulus. You and I have talked about this before. Have we made any progress? Do we have a better sense of what is appropriate, what is necessary, what will get done? Because it really, frankly, is about this month, right? July 31 is the deadline on the unemployment insurance.
Right. The unemployment benefit in the CARES Act ends at the end of the month. And when we talk about stimulus, I again want to reinforce steps like the USMCA. I mean, that is going to stimulate the economy. That's going to stimulate job growth. Tax relief, that's going to stimulate job growth. And I think that's something that will be talked about toward the end of the month. And of course, the president has already emphasized how he wants to take a closer look at eliminating regulatory burdens that can free up our economy more. In terms of unemployment benefits, yeah, I think there will be discussion. It's clear to me that the $600 a week benefit was a really good thing to do when the economy was being shut down. We were closing our economy. But I think it looks very different in an opening economy, particularly one that's doing so much better than people were expecting back in March. So I think we're really ahead of where we thought we'd be. And the $600 benefit, I think it's right that it expires at the end of the month.
Okay, Mr. Secretary, thank you so much for being here. Always a treat to have you with us. That is Eugene Scalia. He is the Secretary of the Department of Labor. And coming up next, we're going to talk with retired Brigadier General Mark Kimmitt about those reports, at least, of a Russian bounty on the heads of American soldiers in Afghanistan. That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Press reports last week about possible bounties that Russia may have put on the heads of U.S. servicemen in Afghanistan raised a storm in Washington, including about whether the reports even were accurate. It's something we asked retired General Stan McChrystal about really how big of a difference is there between, on the one hand, Russia supplying aid and weapons, and on the other hand, putting bounties. This is what he said. He's not sure he sees that big a difference.
I think it's a difference without a distinction. I think that it's not a good thing, particularly if we are, going to have good relations with Russia, theoretically. But at the same time, it's the kind of thing that has been done historically for a long time.
We welcome now retired Brigadier General Mark Kimmitt, who has served as a Deputy Assistant Secretary in the Defense Department, as an Assistant Secretary in the State Department. General, thank you so much for being with us. Always good to have you with us. You heard what Stan McChrystal said. I guess he was your West Point classmate. Is this that big a deal if, in fact, the Russians did post a bounty on U.S. soldiers?
Well, it's a big deal in terms of the fact that we know the Russians have been arming and equipping the Taliban for years and years. But as Stan said, whether it's bounties through money or through arms and equipment, it really doesn't make that much of a difference. The Russians are actively supporting the Taliban, and as Stan also said, it's unhelpful if we want to have any kind of relationship with the Russians.
Is there, if you forgive the expression, a public relations aspect to this? Now that it's out in the open, that at least perhaps this happened, does it make it more imperative the U.S. do something to react to that? Because bounties are sort of inflammatory. I think we have to agree on that.
No, I wrote a recent article talking about this in Cipher Brief, and when you use the word bounties, you have this image from the American West of a guy riding into town and throwing a body off of a horse and asking for the money from the sheriff. And I think we need to get beyond that, the evocative terminology, and understand what the Russians are trying to do. And quite frankly, no different from what we were doing to the Russians in 1979 through 1989.
So I think maybe the larger issue that you're pointing to, and I think General McChrystal was as well, is forget about what you call it. Clearly, the Russians at this point are not our friends. I'm not sure they're our allies. I don't know if they're rivals. I don't know how do we describe them. But how do we formulate an effective policy to deal with this country, given its stance with respect to us?
Well, in fact, the Russians are making the policy, not us. We are responding and have been responsive to what the Russians are doing, whether it's in Afghanistan, Syria, now what we're seeing inside of Libya. This is a very aggressive policy on the part of Vladimir Putin and his regime, and our best policy is to try to check him at every location the way we checked the Soviet Union for years and years during the Cold War. We can't let this aggression go unchecked.
And how much of that is kinetic? I mean, how much of it, we've put sanctions on, goodness knows, economic sanctions. I'm not sure those have been terribly effective. I mean, what are the sorts of levers that we have at this point?
Well, we often use this acronym DIME. We have all the sorts of levers, such as diplomatic, informational, military, economic. Clearly, the Russian economy is very, very weak. Sanctions are having an effect there the way that they're having inside of Iran. We can also use diplomacy to push not simply the United States, but all of its allies, because our allies are far more affected by the Russian incursions and the Russian influence, particularly our European allies. So we should work as an organization of nations to push back on Russia and what Vladimir Putin is trying to do. But I think it's also important to understand that Russia, at its core, is a weak country. It has a declining birth rate. It has a constantly declining age of its citizens. The economy is weak. It's primarily dependent upon petroleum. So while it is a threat, I think we need to understand it's not the Soviet threat of the Cold War, but it's just a very aggressive nation that has a leader that knows how to play his cards well.
Mark, what do you think about the suggestion that I've seen in the press, at least, about declaring the GRU, which I think is the intelligence arm of the Russian military, a terrorist organization? Is that constructive?
It probably would be constructive, particularly Unit 29155, which has been responsible for many of these actions. Whether it's a terrorist organization or whether it's a sanctioned organization, the GRU, the modern-day version of the KGB, has been responsible not simply for these types of acts, but they've been operating in targeted assassinations around the world and other disruptive operations. So, yeah, we ought to take action against that organization, and I had some fairly radical suggestions in the piece I wrote for Cypher Brief.
And as a practical matter, you've dealt with these issues for many, many years, Mark. Are we inadvertently encouraging Vladimir Putin by not responding to some of what he's done in the Crimea, in various places around the world, as he's pushed us? Syria, you mentioned.
Oh, I think this notion that somehow we have been non-responsive to Vladimir Putin, I think, is a bit of a stretch. We haven't been as strong against him as we should, and candidly, the president may be a little bit soft as he is with other tough leaders, but I'm often reminded of an airplane that is running out of gas, and that's Vladimir Putin's regime, and that's the Soviet Union. Sooner or later, it's going very, very fast, but sooner or later, it's going to fall out of the sky. It cannot sustain this level of activity, whether it's military, whether it's intelligence activity. It just can't maintain this over time. But that, I think we should be working hard to accelerate the demise of the Putin regime so that we can, in fact, get back to normalized relationships with a post-Putin Russia.
But Mark, to put it very pointedly, does pulling our troops out of Germany, perhaps to sanction Russia for building a Nord Stream 2 pipeline, is that really a way to put pressure on Vladimir Putin?
Well, again, I think that there were other reasons that we did that pulling of 10,000 troops out. But let's also be candid. 10,000 troops is a drop in the bucket. We had 500,000 troops in Europe in the 80s, and it was clear that even then we were unable to stop an invasion from the Soviet Union and East Germans and the Warsaw Pact nations. So I think there's a lot of symbolism in terms of us repositioning those 10,000 soldiers to Poland, but as a practical effect, it doesn't have any military value at all.
Okay, Mark, thank you so much for being with us. I'm delighted to say that retired Brigadier General Mark Kimmett will be staying with us for the second hour of Balance of Power. We're going to talk more broadly about U.S. relations with the world in a time of Donald Trump. In the meantime, right here, the Supreme Court of the United States is winding up its term. We're going to talk with Greg Stohr, our Supreme Court reporter, about the two decisions they brought down today. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The Supreme Court is just about to end its term, maybe this week, and it came up with two big decisions today, both of which could affect the elections. We turn now to our Supreme Court reporter. He is Greg Stohr, of course. And Greg, let's talk about faithless electors, because I just love the name of the issue. It just sounds so juicy.
Yeah, this is part of our very complicated presidential election system here in the U.S. You know, most of us, when we go to the polls, we think that if one candidate wins the state's popular vote, automatically that candidate gets the state's votes in the electoral college. But it turns out there was some question about whether the people who actually cast those votes in the electoral college have the ability to vote as they please. And today the Supreme Court said no, they do not, and states can penalize them or even remove them if they try to cast their vote for somebody other than the person who won the statewide vote.
Yeah, I mean, there may have been some question, but the Supreme Court didn't have much question, right? They didn't hesitate very long. The other one, though, is actually about robocalls. Good news for us, they can still ban robocalls to our cell phones.
That's right, they can. The court actually broadened this ban in the sense that there was an exception in there for calls made to collect debt owed to the government. And the court said that exception to it is unconstitutional because it favors government speech over other speech, including political speech. And then the court said, we're going to get rid of that exception and we're going to keep the rest of the statute intact. So we still have this federal ban on robocalls to mobile phones, and it now applies when somebody's trying to collect a government debt as well.
Yeah, and goodness knows it applies to election calls, because otherwise we'd be inundated probably from robocalls from the candidates, right?
That's exactly right. And the group that was challenging this is a group of political consultants and the Democratic parties of Washington State and Oregon. They were indeed looking for the ability to make more phone calls to your mobile phone.
Well, I don't get a vote, but I'm in favor, I think, basically just not to be harassed. Thank you so much to Greg Storr, our crack Supreme Court reporter. Coming up in the second hour of Balance of Power on radio, we're going to talk to Hilda Solis. She's former Secretary of Labor under President Obama. That's in our second hour. This is Balance of Power on Bloomberg Television and on Bloomberg Radio.